Nicholson, and welcome to my YouTube channel. In this video, I'm going to give you all the best mortgage rates. We haven't done this for a good few weeks, and things have changed massively. We've got some new lenders. I haven't even heard of some of these, and we've got some rate reductions across the board as well. So it is moving in the right direction, which is good. Even with bad inflation data and all the stuff that's going on in the world, I'm sure you've seen the Trump tariffs that came out today and the impact they're having on the stock market. Well, rates aren't hit too badly for now. In fact, some economists think the Bank of England might have to step up and cut rates a little faster, which could be good. Now, if you're new around here and you've never watched this channel before, I'm James Nicholson, and we bring you new property content every single day on the channel. Do make sure you click that subscribe button down below and smash that bell notification. We're on the way to 40,000 subscribers now. We're a smidge away, which you can see around here. And let's get some views on this video. Smash like, tickle like, do something to the like button. That helps with the YouTube algorithm. And then share the video, WhatsApp it, email it, or Facebook message it to someone. I'm certain you know somebody right now that is looking for a remortgage and doesn't know what to do at the moment. Should they fix? Should they hold? Well, this video will help them. So, first off, I want to look at HMO mortgages. Now, maybe you don't know what an HMO is, so I'll quickly explain. HMO stands for House of Multiple Occupancy. It's where you take a four-bedroom house and rather than renting it out to one family, you rent it out on a room-by-room basis. You'll often include all the bills and you'll get a higher rent per room than you would have got if you rented it out in one go. And so these mortgages tend to have slightly higher rates because the banks know you're going to make more money when you do these kind of deals, and there's not lots of lenders that do this. So Mortgage Works have the best rates for HMOs at the moment. Mortgage Works, if you've not heard of them, they're part of Nationwide Building Society. Nationwide also own Virgin Money as well. So the Mortgage Works have a 5-year deal at the moment, which stands at 5.29%. And the fees on that are 3% of the balance that you borrow, and they will lend you 75% loan to value. So if you've got 100 grand property, they'll lend you 75 grand. Not bad. The 2-year deal is better in this instance, and it's a rate of 4.74%. These have gone up slightly in this category since we last did it. Not much, but they are a smidge higher. Fees on the 2% are also 2-year deal are also at 3%, and the loan to value is also 75%, like it would be with most investment deals. Now, limited company deals. What does this mean? Well, if you're going to buy a property now, I highly recommend that you put it inside a limited company. The reason for that is it's way more tax efficient now. So I have properties in limited companies and I can write off costs. I can write off travel expenses. I can write off my phone bill. I can write off lots of other expenses against the property a lot easier than you can in your personal name. So limited company for now, I believe, is the best way to get new investments in. So Mortgage Works again has the best deal, and they've actually decreased both of these rates despite increasing the HMO ones. So the 5-year deal is just under 5%, and that's at 4.99%. The fees are quite high, they're 3%. Loan to value is 75% on this one. Again, with limited company mortgages, there are less lenders that do this, and so the fees, the costs are higher than you'll see on a residential mortgage. That's probably going to be that way for a little while. The 2-year deal has dropped to 4.44%. That's a decrease as well, which is good. The fees are 3% of the loan balance as well, 75% loan to value. So Mortgage Works is your best option at the moment for a limited company deal. I just spoke with Mortgage Works today, actually. I'm doing a refinance with them. And right now, they can process things quite quickly, they're saying, because they're saying and seeing what other places are saying and what we're saying in the videos, it has got quiet. They've been really busy in January, February, and March, the guy I was speaking to said, but it has slowed down markedly now. But that's good if you want to get something through quickly. Buy to let in your personal name. These deals, some of these are pretty tasty. So they've got a 5-year deal that's under 4% at 3.99% with fees of 2,250. They do have other deals that have percentage like fees if you want that. So you can balance out and work out which one works best for you. It's always best to go for a broker. A broker will help you really understand your circumstances and stuff like that. But that's good to see a 5-year deal under 5%, under 4%. And the 2-year deal, this was at 3.49% for ages. They've just dropped it to 3.39%, which is good. I'm getting some additional borrowing on a buy to let in my personal name, and that's actually the rate that I'm getting. And I've gone for the 3% fee on that because I'm only taking out like 40 grand, so it works quite well. So loan to value maximum they will give you is 75%. So Mortgage Works, they are part of Nationwide. As I said, they seem to be the best place to go for a lot of deals on buy to lets. So let's look at residential mortgages. So NatWest have got a 5-year deal at 4.19%, which is a cut. Fees are 490 on that one. That's not bad, and they have been pretty competitive on that. Often people will say to me when I talk about NatWest deals, they'll say, I can't see this on the NatWest website. Often you need to go through a broker to get the best deals for NatWest. So always go through a broker. I just find it gets things done better, more organized, pushes things over the line when you need it to be done. I'm not saying use my broker, use any broker. Like, I just think brokers are worth their money. 2-year deal is with a bank called a building society called the Yorkshire Building Society, and they've got a deal at 4.32%, 995 in fees, and they will lend you 75% loan to value. So these are the best 2 deals that you can get on a 5-year or a 2-year deal when you've got a 25% deposit or 25% equity in that deal. So go and check those out. But what if you've got a smaller deposit, you've got less equity, or you're a first-time buyer that's got a 10% deposit? Well, both of the best deals on the market are with someone called Furnace Building Society. I've not heard of those guys. But they've got some good rates, under 5%. I know they're not under 4%, but you've got to think here, there's more risk for them. If the market dropped 15%, you'd be in negative equity, you could hand the keys back, and they would lose money. So they've got to make some profit on that, of course. So the 5-year deal they've got is at 4.64%. This is a slight increase on the better rate that we had on a 5-year deal previously. Fees are 999. 10% deposit or equity required on that. And the 2-year deal is 4.79%. The last time we looked at this, we were looking at around 4.99% on a 2-year deal. So this is down and it's moved in the right direction. Fees are 999. Now, what should you do if you're considering a mortgage at the moment? There's a lot of uncertainty in the market, especially with this trade war that's kicked off yesterday. And what I've said for over a year now is, if you've got a deal that expires in the next few months, often you can do it 6 months early, sometimes 3 months early. You have to speak to your lender and see what they offer, but you can fix a rate today. So let's just say I've got a deal that ends this summer at some point. I can go to my lender and I can fix a deal today, get a decision in principle, get a mortgage offer out for a deal. Let's say it was Furnace and I took the 2-year deal at 4.79%. But then, because of this trade war that started and inflation comes roaring back, which Bank of England said could happen at some point this year, interest rates go up. The Bank of England put the interest rate up, or the lender puts the rate up. Because you've got your offer already, you've secured that better deal. But what if the flip side happens? The trade war could cause a global recession, which has been talked about as well. That potentially could happen. So let's just say it kicks off a global recession. And then the Bank of England, the Federal Reserve, and everyone starts cutting rates. And these lenders cut rates, but you've got your offer at a higher rate. Well, because you haven't actually started your deal, you can swap onto that better deal with 99% of lenders. Now, you should check when you're doing your application, ask those questions. If a better deal comes out before I start the new one, can I swap onto that? Most lenders will say yes. It's your due diligence to check whether your lender does that or not. Some might charge £100 admin fee. If the rate's gone down 1%, who cares about £100? But this gives you the certainty and it protects you against the worst case scenario. So that's what I would do and share that with everyone you know. Now, if you've got any rates or lenders that you think have got better deals than this, please do comment below. That really helps people that watch the channel. Thousands will watch this video. Do make sure you smash that like button. Make sure that you subscribe and share the video with some other people as well. Let's get the message out on what's going on in the market. Do check out all the other content as well on the channel, including this video that will come up right here.